Assalamualaikum and good afternoon to all my students. I will continue our discussion related to the money banking and financial markets by focusing on the topic of the central banks. I hope all students can focus and be able to understand about these discussions. There are four subtopics that will be discussed in this topic, namely origins of the central bank system, functions of the central bank, the structures of central banks, or the Feds, or we call it the Federal Reserve, and independent central banks. Okay, now let us start with the first subtopic by touching on the origins of the central bank system. A central bank is an autonomous national institution that regulates banks, administers monetary policy, and offers financial services such as economic research. Its objective are to keep the country's currency stable, unemployment low, and inflation at bay. The majority of central banks are governed by a board of member banks. The director is appointed by the country's most powerful elected figure. He or she is approved by the national legislative body. This keeps the central banks on track with the country's long-term policy objective. At the same time, in its day-to-day activities, it is free of political interference. That model was first developed or devised by the banks in England. Despite conspiracy rumors to the contrary, there is also who owns the Federal Reserve Banks of the United States. Now let us discuss about the activity of central banks. What are the functions of central bank usually includes? The first one is monetary policy by setting the official interest rates and controlling money supply. The second one is financial stability, acting as a government banker and as the bankers' banks, or we call it lender of last resort. And the third one is reserve management, managing a country's foreign exchange and gold reserve and government bonds. Banking supervision, regulating and supervising the banking industry. The other functions of central banks is payment system, which is the central bank will manage or supervising of payments interbanking clearing systems, and also coins and note issuance, or we call it the currency issuance. And the other ones is the other functions of central bank may include economic research, statistical collections, supervisions of deposit guarantee schemes, advice to governments in financial policy. There are four goals of the central banks in managing the monetary systems in a country. The four goals, namely price stability, high employment, economic growth, and climate change. The price stability is the basic functions of central banks is to preserve price stability, which is defined as an inflation rate that does not exceed a certain threshold. Inflation is defined as the depreciations of a currency, or in other words, the increase in price relative to the currency. Inflation is currently being targeted by most central banks at around 2%. High employment, the time between jobs while a worker is looking for works or migrating from one job to another, is as known as frictional unemployment. Unintended unemployment is defined as unemployment that is not caused by frictions. The economic growth, which is the capital investments such as more or better machinery, can help boost the economic growth. With a low interest rate, business can borrow money to invest in their capital stock while paying less interest. Lowering interest rate is thus thought to promote economic growth and is frequently employed to improve the periods of sluggish growth. Rising the interest rates, or the other hand, is frequently employed as a counter-cyclical strategy to keep the economy from overheating and avoid market bubbles during periods of rapid economic developments. Stability of interest rates The financial markets and the foreign currency markets are other monetary policy objectives. Goals frequently can be isolated from one another and they frequently clash. As a result, before implementing a policy, costs must be carefully considered. The first one is climate change. Central banks should include climate-related factors in their collateral eligibility regimes when undertaking asset acquisitions and in their financing operations according to proponents of green monetary policy. However, skeptics such as Jan Whitmans argue that central banks should not be in charge of climate policy. Now let us more understand and discuss about what is the Federal Reserve or central bank, or after this we call it the Fed. The Federal Reserve or the Fed, also known as the Fed, is the central bank of the United States of America. It is the world's largest free market economy, highest financial authority. Because of the United States' enormous influence on the global economics, the Fed is regarded as one of the world's most powerful financial institutions in the world. The Federal Reserve manages the government monetary policy without the needs for legislative participations. It also handles all other central bank tasks such as regulating bank activity and conducting surveys on the US and global economies, all with the goal of ensuring financial stability. What are the functions of Federal Reserve? The Federal Reserve is the central bank of the United States and thus is responsible for maintaining the overall stability of country's economy. It's conducting monetary policy. The Federal Reserve, through its monetary policy, strives to achieve three major objectives as laid down by Congress, which is maximum employment, stable price, and low long-term interest rate. The Federal Reserve controls inflation, investments, and other economic parameters by controlling the availability of credit in the economy. The second one is promoting financial system stability, which is the Federal Reserve ensure the stability of the US financial system, monitoring internal and external influences and preventing any future crisis. The third functions of the Fed is regulating financial institutions and their activities. The Federal Reserve supervises the activity of financial institutions and control their impacts on economy as a whole. The Federal Reserve also fostering payments and settlement system safety. The Fed works to ensure the glitch-free secure system for payment gateways for the benefits of the American citizens. And the last one is to promoting consumer protections, which is consumer rights are an integral components of the financial service sectors. And the Federal Reserve work continuously to ensure this right for all consumers. Okay, now let us move to the second subtopic, which will touch on the functions of the central banks. In the banking system, the central bank is recognized as the most powerful financial institutions. It is seen as an essential component of a country's economic and financial system. The central bank is an independent authority in charge of supervising, regulating, and stabilizing the country's monetary and banking frameworks. Central banks are in charge of ensuring the country's financial stability and economic sovereignty. The functions of central bank can be discussed as follows. The first one is currency regulator or bank of issue. In a given economy, central banks have sole authority over the productions of currency. The world central banks are all involved in ensuring currency notes to the economy. The second one is bank to the governments, which is one of the central bank must essential function is to serve as a government's bank. The central bank is a financial institution that receive deposits and distribute funds to the governments. It's also in charge to making and collecting government payment. Central banks also provide short-term loans to the government to help it recover from economic downturns. The third one is custodians of cash reserve. Commercial banks in a country. Commercial banks hold a proportions of the cash balance in the forms of deposit with the central banks. When there is a strong demand for cash, commercial banks can draw on that sums and pay it back when there is low demand for cash. Custodians of international currency. Maintaining a minimum foreign currency balance is an important function of the central banks. The goals of maintaining such as balance is to manage unexpected or emergency foreign reserve requirements, as well as to avoid any negative balance of payment deficits. The fifth is lender of last resort. In time of cash shortage, the central bank reserve as a lender of last resort, giving funds to its member banks. It carried out this job through issuing loans secured by securities, treasury bills, and rediscounting, rediscounting bills. Clearings house for transfer and settlements. The central banks serve as a clearing house for commercial banks, assisting in the settlements of mutual indebtedness. Control of credit. Central bank also serve as credit regulators in economy. Commercial banks create a lot of credit in the economy, which cause inflation to rise. And last but not least, the functions of the central bank is protecting depositor interest. In order to protect depositors' interest, the central bank must also monitor the functionings commercial bank. The third subtopic that will be discussed is about structures of the central banks or the Fed. The Federal Reserve is multi-layered financial system whose authority and ethos are derived from the Federal Reserve Act of 1913. Despite being an executive agency, the financial body is classified as independent within the government because it is mainly independent of the presidents or Congress jurisdictions. The following are the four main power of Federal Reserve. Boards of Governor. The monetary body's overall functions as a central banks are overseen by a seven-member boards of governor, which includes directing the activities of 12 regional banks, formulating monetary policies, and overseeing the economy in general. The second one is Federal Open Market Committee. The Federal Open Market Committee, or we call it FOMC, is in charge of open market operations, which are a key part of monetary policy. 12 regional Federal Reserve banks. The board's monetary policies are carried out through the regional Federal Reserve Bank, which number 12 in total. And the other member banks, a member bank is a private financial organization that invests in and earns from its regional Federal Reserve Bank. The last subtopic discussed in this chapter is independent central banks. Several governments have chosen to make central banks be independent. The economic argument behind central banks' independence is that when government delegate monetary policy to an independent central bank with an anti-inflationary goals rather than elected politicians, the policy will not reflect the politician priorities. When government have influence over monetary policy, politicians may be motivated to promote economic activity in the run up to an elections at the expense of the economies and the country's long-term health. The studies identify several factors that complements the independence of the central banks. The first one is institutions independence. The central bank's independence is incorporated in law and protects it from political meddling. In general, institution independence means that politicians should avoid attempting to influence monetary policy decisions, and that central bank should avoid attempting to influence government politics. The second one is goal independence, which is the central bank has the authority to determine its own policy goals, such as inflation targeting, money supply control, or maintaining a fixed exchange rate. While these forms of independence is more prevalent, many central banks prefer to disclose their policy aims in collaborations with relevant government agencies. The third factors that complements the independence of the central banks is the functional and operational independence. The central banks has the freedoms to choose the optimal methods for attaining its policy objective, including the instruments utilized and when they are employed. And the last one is personal independence. The other types of independence are impossible to achieve unless central bankers have a high levels of job stabilities. Beside that four factors, there are two more additional factors that complements the independence of the central banks. Financial independence. Central banks have complete budget autonomy and some are even forbidden from lending to government. This is intended to deter politicians from attempting to influence central banks. And the last one is legal independence, which is some central banks such as European Central Banks or ECB have their own legal personality, allowing them to ratify international agreements without the permissions of the governments and to go to court. That's all the discussion related to the central banks. Hope all of my students can understand it. Additional information can be read in the flip books that has been provided. Thank you.